Today we had the big Samsung unveiling. Does that at all put a damper on all of this hype around Apple's impending iPhone for later this year?
Well, the thing we've seen is that Apple did capitalize quite significantly on the fact that Samsung did have a major recall last year. But one has to wonder whether Samsung in some ways jumped the gun. It gives them a certain amount of head start on Apple. The new iPhone we expect to come a little bit later this year. But the crucial quarter for any smartphone sales is Christmas. The 3 months leading up to Christmas, that's when the big sales are done. And Apple usually releases the product just ahead of that quarter. So, it's hard to make any particular judgment on the relative strength of either phone until we've got both out there in the market.
Right. And I want to get your thoughts on this chart. If we just take a look into my Bloomberg terminal, we can see that Apple has had some slowing iPhone sales growth, but if we see in that most recent quarter, there's been a bit of an uptick. I mean, what do you attribute that to?
Well, it was interesting in the last quarter of Apple sales that the growth which they experienced, they attributed to new customers. So not returning customers upgrading the iPhones they already have or swapping their old iPhones for new iPhones, but rather attracting customers from competitors like Samsung, for example. So that gave a lot of analysts positive food for thought. They kind of sat there and thought, well, if Apple releases a phone which isn't significantly better than the previous one and people still decide to switch to it, then the strength of the brand is holding up. If then you extrapolate that going forward and the expectation is then the iPhone 8 or iPhone 10 or whatever they decide to call it does prove to be the blockbuster product that everyone's expecting, then it means that they're expecting a sort of super cycle, huge sales of iPhones, and they're very optimistic about it.
And David, something that's become more apparent is that Apple really needs to build up this services part of its business as hardware continues to slow. Can Apple do that fast enough before Facebook and Google can expand into hardware even quicker?
Yeah, that's a really interesting question, Selina. I mean, I think it's pretty funny that somebody should call Apple one of the most underappreciated stocks and companies, considering it's the highest valued company in history. It's at an all-time peak. On the other hand, there is a certain logic to that, and both those analysts you mentioned are very smart guys who've been around a long time. Apple's PE is way lower than Facebook or Google or Amazon, but that's because it's historically been a hardware company. So, hardware is, high margin, but, it's just not the same kind of growth business that software is by definition. You can't just make more with no cost. But if Apple could build its software and services business and actually get revenue from it, then they could really get into a new category and, believe it or not, even with their astonishing current valuation, build on that. I do think that's a possibility. However, do I see evidence of that happening yet? No, I don't. I think Apple has done a relatively poor job building a services and software business. And just one example I'd throw out is, look at the Apple Maps compared to Google Maps. I mean, how many people on the iPhone routinely use Apple's Maps? It's only people who aren't aware of how good Google's Maps are. So they've got a real high bar to meet to do it, but it's possible.
I mean, what do you make of that? You recently had this great podcast about how they're really beefing up this app ecosystem they have. I mean, what are they really doing to make this better, the software services part?
I mean, David makes the killer point. Amazon trades at close to 180 times its earnings, right? And Apple trades at closer to 16. That's a massive, massive delta for them to fill. Now, what Apple has been doing, and that the one thing which drove growth above anything else in terms of the percentage growth it experienced, or sorry, the absolute growth it experienced, was the App Store last year. Gene Munster estimated it grew 40% revenue last year. Now, it grew 40% to 8.6 billion. That equates to about 4% of its total revenue. So it's a tiny, tiny, tiny slice of the pie. But as David just said, it's very, very high margin. They're suddenly waking up to the fact they have got to give developers what they want if they're going to convince them to build apps which not only are compelling but drive returning revenue. And that's why they have the new business model which gives more subscription revenue to developers. Previously, the way that the App Store used to work is you might pay $4 for an app once, you might use it once or twice, and then you're not really given any reason to keep on using it. Now they really want developers to build apps which have a lifespan, which of course not only then drives returning revenue from the App Store, but it also makes the iPhone sticky. It makes it hard to trade in that iPhone for an Android because you are pumping data into it, which makes you dependent upon it.
Right. And David, really quick, I mean, which part of these software services do you think has the most potential? They have the cloud, they have music, apps.
In a way, it's the cloud. I mean, the real holy grail is annuity businesses. So if you can get people to pay you a subscription for something, and of course music is subscription, and music is essentially a cloud service, those are the kinds of things you want to go toward. Anybody who can get that right has basically the ability to print money. And Apple, unfortunately, has not proven they can do it. I don't rule it out, like I said before.